So our main focus today is going to be on talking through substantive tests over balances as of period end as they relate to cash. So this is an overall summary of what we're most concerned with in terms of assertions related to cash. So we are worried about cash existence. So we always know with asset accounts, existence is a big concern. And of course, confirmation is our big test here. And we are going to do that confirmation in conjunction with our cash account reconciliations. So we'll see this in a minute. But yes, we'll confirm each cash account balance directly with the bank itself. For completeness tests, we will also be testing the bank reconciliation. So we're going to make sure there's no understatement there. So we'll talk about this because we're going to go through the reconciliation in detail. And then for valuation as well, the bank reconciliation comes into play. With valuation, we don't have a ton of complex issues with cash. The one-time valuation might come into play would be if you had some foreign cash accounts and you needed to do, foreign currency translation. But otherwise, cash balance tends to be cash balance. Let's talk about auditing the bank reconciliation and what you'll be getting. All right, so for each cash account, this is talking about the general cash account because that's where all the money sits typically. Most of the other accounts sit at or near zero. When we're auditing each cash account, what we start with is a copy of the bank reconciliation. Then we will also obtain for each account the standard bank confirmation and cutoff bank statement. These two items are going to be supporting documentation for that bank reconciliation to help you audit the bank reconciliation. And let's now talk through what each of these three items is. So the bank reconciliation is basically a document that reconciles the difference between bank balance per the bank. So that's why it always starts with bank balance per bank at the beginning. So meaning this is the cash balance according to your bank as of a particular date, such as 12/31/18, right? So it's reconciling the difference between that and the cash balance per the books as of the same date, as of 12/31/18 in this case. So why would these two things be different? Well, the fundamental reason why these two things are different is banks and your bank statement operates on cash basis accounting, and your books operates on accrual basis accounting, right? So the two are never going to match up perfectly. There's always going to be differences. And the two biggest differences that you're going to have are generally going to be number one, deposits in transit, and number two, outstanding checks. For deposits in transit, so these would be deposits that you have made prior to year end, right? So as in you have physically taken all those checks, that cash into the bank, you filled out the deposit slip, and you've handed it over. So you've taken that prior to year end. And so of course, if you've taken all of it to the bank prior to year end, as far as you are concerned, right, according to your books, you have deposited that cash and your cash account should be debited. But according to the bank, that cash, those deposits are going to take a few days to clear. So this takes a few days to clear, and it will clear in January, right? So that won't be reflected on the bank's books until shortly after year end. So this is going to create a difference. The other difference is outstanding checks. These are checks that I have written to people. Okay, so it could be my employees, it could be vendors. I've written them, I've sent them out prior to year end, and the other party, right, the party who's actually going to receive the check, they have not deposited the check yet. Or they may have just deposited it, but it hasn't cleared their account yet. Those checks, as soon as I write them and stick them in the mail, we talked about this kind of being this mailbox rule, right? As soon as I have cut the check, I have deposited it in the mail. As far as I'm concerned, it is paid. I should credit cash. But the bank is not going to take that money out of your account until that person walks into the bank with your check and is like, hey, I want to, deposit this or cash this, right? So on their end, the transaction's not complete till the person actually comes in and withdraws the money. Most of these outstanding checks should clear in January, or it could be later, right? They could take a while to clear. We don't really know. It depends on the person on the other end of the transaction. It could be somebody like me. If I ever get a paper check, I tend to take a few months to deposit it. I'm very lazy. So it could take a while. All right. Two biggest items are your deposits in transit, your outstanding checks. Then we also have other random small items like potential service charges or insufficient fund charges. Things like that can also create small differences. But these types of differences that don't fall into deposits in transit and outstanding checks, they tend for most audits to be immaterial. So usually we can just tick those items immaterial and do a little bit of testing of the deposits in transit, do a little bit of sampling to test the outstanding checks, and move on with our lives. Now, of course, we will test this balance per bank. That's going to be a big test for us. And we test that balance per bank by getting the bank confirmation, right? That was our number 2 document here that said we wanted to get to audit an account. So the bank confirmation is here. It looks like this. And you'll notice if we kind of zoom in here that similar to the accounts receivable confirmations we looked at, this is basically, we read it, it's a request from the audit client to the bank saying, hey, could you please provide our auditors with this information, right? So it'll say, we provided our accountants with this information. Please confirm the accuracy of the information. If the balances were left blank, please complete this form by furnishing the balances. Here, you'll notice it says, please use the enclosed envelope to return the form directly to our accountant. And this is a very standard form right here. Our confirmation forms that we used to send out for cash looked exactly like this. So this is truly standard. It's not some of the example work papers your textbook uses do not look terribly realistic, but this confirmation form actually does look exactly like what we used to send out. Let's now look down here. So you'll notice it is signed, right, by the customer, and that, of course, is the customer of the bank, right? Because it's a request from the customer of the bank saying, hey, please provide our auditors with this information. So even though the auditor is the one mailing this request, it has to include authorization from the client, and this person needs to be whoever is the signatory for the account, because they're the ones that are going to be authorized to say, yes, it's okay to release this information to our accountants, right? Because a bank just couldn't be releasing this type of information willy-nilly to anybody. Okay, so they're telling the bank it's okay to give the information to the accountants. Basically what we do is we have the client fill out this form, then they need to give it back to us so we can send it directly to the bank. Then the bank is able to fill it out, send it back directly to us. So this first section here contains deposit balances, and you'll notice it has both a general account and a payroll account. So the general account is what we were looking at on that bank reconciliation. So this balance here should match the balance per bank that we saw on the prior slide, right? So this is what's going to agree to our confirmation. And you'll also notice there's kind of this second portion down here, which relates to loan information. This one is blank, so they clearly don't also have a loan at the bank. But this is very helpful because sometimes you could have a lien against the assets with the bank, and so that would show up there. Sometimes you also just have, like a lot of times they'll work with the same bank that they have a deposit account with, they'll also have a debt revolver with. And so it's kind of like a two for the price of one confirmation where I can confirm my debt balance and my cash balance at the same time. And then lastly, you'll notice that the bank employee is going to sign this as well before they return it. And then of course they need to return it directly to the auditor. So last thing it said we needed here was this cutoff bank statement, right? So the point of the cutoff bank statement is it is a bank statement which you'll see normally covers 7 to 10 day period after the date on which the bank account was reconciled. Meaning if the bank account is reconciled, in our example, as of year end, which is 12/31/18, I'm looking for a bank cutoff statement that covers the first week or two of January. So this is going to be January 2019. The point of me getting a cutoff bank statement that covers the first week or two of January 2019 is it should show me my deposits in transit, my outstanding checks clearing the bank. I should be able to see these transactions clearing the bank, and then I can validate that, yep, that happened, yep, that happened, yep. So I'm able to basically validate this balance directly with the bank as of 12/31, and then I'm able to see shortly after year end all these other transactions passed through. And then basically this makes me able to be good with the balance per books as of 12/31/18, because I'm good with balance per bank, I'm good with all the differences. Okay, so the next slide talks about how basically the tests that the auditor does for the bank reconciliation. And it talks through the various procedures that the auditor does. So we start by testing mathematical accuracy, which basically means I check that these things, like this totals correctly, this totals correctly, this totals correctly, nothing too complicated there. Then I agree the balance per bank on the reconciliation to the bank confirmation, just like we did here, and making sure this balance matches up with this balance on the bank reconciliation. Then I'll be tracing deposits in transit to the cutoff bank statement. And step 4 talks about comparing outstanding checks to the cutoff bank statement. Okay, so this is basically the process of validating my reconciling items by comparing them to my cutoff bank statement, which is covering that first period in January. Then what you can also do is try to validate any charges included on the reconciliation by either comparing them to the cutoff bank statement. So basically these little charges we talked about, if they are material to you or you do want to validate them, we might be able to see them on the January bank statement to try to validate that they are what the company says they are. And then last but not least, we'd agree the balance per books to the cash lead schedule. I don't have a cash lead schedule slide, so I can't do that. But basically what it means is I have the balance per books here, right? It's the 1,772,340. That's my balance per books. And I'm going to also have a nice schedule which has all the cash account balances. And in total, all those cash balances are going to match up to whatever the cash balance in the 10K, right, on the balance sheet is. So what I want to do is agree this balance per books in the reconciliation. I want to agree that to my schedule that includes all those cash balances that's ultimately going to agree to my cash total that's in my balance sheet. So that's my last step.